All right, so let's get started. So some financial topics can be difficult to understand, but your credit score doesn't have to be. If you have credit, such as credit cards or loans for any purpose, you have credit history. And therefore, a report on your financial behavior and how you manage your money, your credit information is analyzed to calculate your credit score. It's a 3-digit number that, along with your credit report, is used for lenders to decide whether or not to grant you credit. In this guide, we'll look on how to repair your credit and how to get over 800 credit score. So many of you, I've noticed too with my clients that everybody was using Credit Karma. So I don't know if many of you use that, but that is not an accurate source for your credit score. You need to be using something that produces a FICO score. Okay, so that you can you'll get excited thinking that Credit Karma is giving you an accurate score. You thinking you're at a 700, but you're really at a 580. So, so what is a score? A score is a number between 300 and 850. It tells lenders how likely you are to pay back the money you borrow, but it's not just used in lending money. In the United States, several lenders use credit scores to make decisions in deciding whether or not to rent you a home. A landlord considers your credit score. Cell phone providers also consider it when opening new accounts. If you want to buy a home someday, your credit score can determine how much the bank will lend you and what the terms of mortgage will be, including the interest rate. Companies may even check your credit score when you apply for a job or insurance policy. So that can be a soft pull too. So it may not be a hard inquiry, but it may be a soft pull, but they're going to check. So how credit works. A credit score can significantly affect your financial life. It plays a key role in lenders' decision to offer you credit. People with credit scores below 640, for example, are generally considered high-risk borrowers. Lenders often charge interest on subprime mortgages at a higher rate than a conventional mortgage to compensate for taking on more risk. They may also require a shorter payment term or a co-signer for borrowers with low credit scores. I'm sorry if you guys weren't able to follow along. All right. So conversely, a credit score of 700 or higher is generally considered good and may result in borrower receiving a lower interest rate, resulting in paying less money and interest over the life of the loan. Scores above 800 are considered excellent. While each lender defines its own credit score ranges, the average FICO score range is often used. So excellent credit is from 800 to 850. Very good credit is 740 to 799. Good is 670 to 739. Fair is 580 to 669, and poor is 300 to 579. And I noticed a lot of my clients had poor scores. So that just means that they were not educated in financial literacy at all. So we want to kind of bridge that gap. And I think that this seminar will do that if you guys follow along with what we're saying. Okay. Your credit score is a statistical analyst of your creditworthiness. Directly affects how much or how little you may be able to pay for the lines of credit you obtain. A person's credit score can also determine the amount of an initial deposit required to a smartphone, a cable service, or utilities, or to rent an apartment. And lenders frequently review borrowers' scores, especially when deciding whether to change an interest rate or credit limit or on a credit card. So if your credit score dropped, your lenders could possibly change your limit. So just be aware of that. They do soft pulls all the time, and that can be a factor. So the 5 components of your credit score. Your credit score is based on the following 5 factors. Your payment history accounts for 35% of your score. This shows whether you make payments on time, how often you miss payments, how many days after the due date you pay your bills, and when payments were last missed. The higher the proportion of on-time payments, the higher your score each time you miss a payment is. It affects your score negatively. So honestly, when I show you the profile, when you think about late payments, sometimes people will be like, I'm just going to pay a little here, a little there. But when you miss a payment, that affects your credit score tremendously. So one missed payment can take your credit score down 50 points. So you really want to stay on top of that. Your profile really should look like for late payments should be anywhere between 99 to 100%. 98% is like no good in some lenders' eyes. So the amount you owe loans and credit cards up to 30% of your score, makes up 30% of your score. This is based on the total amount you owe, the number and types of accounts you have, and the ratio of money owed compared to the amount of credit you have available. High balances and maxed out credit cards will lower your credit score, but lower balances can raise it. If you pay on time, new loans with a short payment history may lower your score temporarily, but loans that are closer to payoff may increase your credit score because they show a successful payment history. So the age of your credit history accounts for 15% of your score. The on-time history, I'm sorry, go back. So the older your on-time payment history is, the higher your score will be. It may seem wise to avoid applying for credit and having debt, but this can actually hurt your credit score if lenders don't have any credit history to examine. The types of credit you have make up 10% of your score. Having a mix of accounts, including installment loans, mortgage loans, and retail, and also credit cards, could improve your score. See, recent credit activity makes up 10%. If you have opened many accounts recently or have requested accounts to be open, this suggests a possible financial problem and may lower your score. However, if you have had the same loans and credit cards for an extended period of time and pay them on time, even after having payment problems, your score will increase over time. So this is a representation of what makes up your credit score. So 35% is payment history, 30% is amount owed, 15% is length of your credit history, and 10% is types of credit. The other 10% is new credit. So this is what I mean by the your credit profile. I don't know if you guys know how to access this, but like I was saying, Credit Karma is where you can get this so that you'll actually know what your credit profile looks like. Many people do not know this because you don't know where to access it. So this is mine. My payment history is at 100%. It was not always like that. With college loans, student loans. So I actually got those late payments removed because that's what I do. And my credit usage is at 6%. Typically, you will hear that you should keep your credit usage at 30%, but you really want it to be lower than that. 30% keeps you stagnant. You want it to be under 10%. And if you want to have just excellent credit usage, you want to keep it between 1% and 6%. The next one is derogatory marks, which means you either have judgments, you either have collections, or some other things on your credit report, and you want to keep that as 0 as well because lenders are looking at your derogatory marks. The credit age, mine is a little bit lower because I just recently got a new credit card, but you want that to be at 5 years and 8 months or higher. Total accounts, you want to have at least 10. But if you can't, do your best to get to 10. And that will include like having even if you do like a short-term loan or something like that, they have a firm now, so you can do that. That can be added to your credit history if you don't have anything. And also cars, installment loans are included in that as well, credit cards. And also hard inquiries. So hard inquiries, this is one that you want to keep between 1 and 2. You don't want to just blindly go and apply for credit because when you do, you look thirsty for credit. And lenders don't like to see that. So again, you can get this profile. If you don't know where to get it, you can get that from Credit Karma. So you should be looking at that. All right, how can I view my credit report? All right, so U.S. federal law gives you the right to receive a free copy of your credit report from each of the 3 major credit reporting companies once a year at the annualcreditreport.com or by calling 877-322-8228. You will not be able to obtain a free credit score this way. However, many banks and credit card companies now offer scores to their customers at no cost. Otherwise, you can purchase your score at annualcreditreport.com, myfico.com, or you can also get off Experian. A lot of my clients use Experian. So beware of free credit score offers. Many sign you up for a monthly credit monitoring service and charge you fees. What if my credit score is low or I have no credit score? The credit scoring the credit scoring system is by no means perfect. Your payment history is the most important factor in your credit score. But what if you have never had a loan before? Student loans and immigrants to the United States students and immigrants to the United States often have low credit scores or none at all. Victims of identity theft may have had their credit scores damaged, and if you've ever never had trouble paying your debts, if you ever had trouble paying your debts, your score may not be ideal. But fear not, by taking the steps, anyone can build it and improve their credit score. So, what do you need to do to build your credit history or repair it if it's not good? Build a credit score or repair it. Fortunately, there are several well-proven measures for building a good credit score. The key is to report as much positive information as possible to credit reporting companies. These measures generally fall into three categories. One, obtaining small credit accounts such as credit cards and paying them off responsibly. Two, reporting recurring payments that are not loans to the credit reporting companies. Three, correcting errors or defects in your credit report. Responsible use of credit accounts. A way to build credit is to use your credit card and pay off the balance each month. Of course, failure to pay on time can cause problems. So it is important to use credit responsibly. The amount of credit limit you are granted is determined by the credit score. If you have no credit score, you may not qualify for regular credit cards. In such case, some banks offer what is called a secure credit card. Secure credit cards are also an ideal way to build a credit history. So do you guys know what those are? Secure cards? Anybody has a secure card or ever got one? Okay. So those, when you do secure cards, you put a certain amount on that card, and if you pay responsibly and keep your credit limit low, I mean not low, your credit limit, your credit usage low, then typically what happens is after 6 months or however long the credit company you went through will give you your money back. So it's a deposit on building your credit. All right. So, in fact, there are just what is that? Oh, okay. So, in fact, they are just as effective as regular unsecured credit cards. Secure cards are different because they require the bank to hold cash security deposits, like I just mentioned, and in case you default on the debt. Over time, if you use a credit card responsibly and pay your bills before the due date passes, the bank will usually return the deposit and issue you an unsecured credit card. Another strategy is to become an authorized user on someone else's credit card account. I don't really recommend that. I have noticed lately that those can have an adverse effect now. They used to work, but now sometimes if the person say they have a $10,000 credit limit and the person is maxing that out, guess what? Now your credit score is going to decrease because of that. So if you're going to do an authorized user, be an authorized user on someone's credit, you definitely want to make sure that they are using their credit responsibly. So there are no requirements to qualify as authorized user, and you will be able to build credit history with each timely monthly payment, as long as the company reports authorized users. Activity to credit reporting companies, local banks, and credit unions may not. Also, your credit will be affected if the account owner pays late and does not pay. So I just mentioned that. So you really want to be careful with that. It can also be helpful to get someone to someone who can sign on an account for you. But be aware that if you miss payments, you can damage that person's credit. In addition to credit cards, other loans can also help you improve your credit score. Consumer loans to purchase, for example, appliances or air conditioners, are also useful. There are also credit builder loans offered by some credit unions and alternative financial institutions such as Missions Asset Fund. These are small, short-term loans with low interest rates provided primarily to build credit history. So moving on to number 2, report regular payments that are not loans. Almost everyone pays monthly bills, but often regular payments are not reported to credit reporting companies. If you rent your house or apartment, you may be able to report rental payments to credit reporting companies through new online services such as renttrack.com. There's a small fee, but it's sometimes paid by the homeowner. 3, paying past due accounts or correcting inaccurate information on your credit report. Repairing a damaged credit history is difficult than building it from scratch, but it can have a big impact. First, the report should be examined to determine if it contains errors. If you find any, you should promptly dispute it with the lender or collector who reported the inaccurate information. U.S. law requires that those who report consumer information to credit reporting companies must respond and substantiate what they claim. So if they don't respond, you can have them remove that. They have to respond. So, second, if you find negative marks on your credit report for unpaid debts or accounts that you have been passed on to collectors, you may have. I'm sorry, you may benefit from a technique called pay to delete. So I will say sometimes people will take the road to actually just pay the debt, which is not a good thing. You actually have to make an agreement with them. Do not pay anything unless you have something in writing stating, it has to be in letter form or email, stating that they are willing to pay. For you to pay the debt, and they will delete it off your account. Because often what happens is that people will pay those debts and they will still remain. So it does nothing for your credit report or your credit score. So make sure you have that in writing. If the creditor does not agree to remove their information from the credit report, the only way the negative information will be removed will be will be when it is deleted from your report, usually within 7 years. However, in the last 12 months of payment history that carries the greatest weight on your credit score. Therefore, derogatory or negative information will have less influence on your credit score when time passes. Building your credit history can be time consuming, but with little patience and consideration, you can do it. So common sense can help you build your credit history. Creditors want your history to show that you also pay bills on time. So the key to a solid credit history is to pay your required installments on time. 5 ways to manage your credit to your advantage. 1, make a budget and follow it. To improve the management of your personal finances, it is not only enough to identify what your income and expenses are, it is also important that you follow your financial goals and set yourself in a disciplined manner. To the extent that you make financial planning and behave according to your plans, you will avoid surprises and successfully meet your goals. 2, responsible consumption. When acquiring a financial product, do not forget to inform yourself about the characteristics and benefits. Compare with other entities that choose one that best fits your pocket. 3, check your documents. Before signing the legal papers of your credit, loan, or credit card, make sure you are fully informed about all the clauses of your contract. 4, measure your ability to pay. Do not exceed the amounts you request from your financial institution. Think that in the future you will have to pay back those resources, and it is important to adjust this to what your income allows you to pay. 5, be cautious when agreeing to a cosigner. Be very careful when cosigning or backing the debt of a third party. Remember that you are the one who has the obligation to cancel the debt in case the holder is unable to make the payments. Evaluate the risks before making decisions. So here's some recommendations for good use of credit cards. It is advisable to set a due date that is close to or after your salary payment date. Organize expenses and control payments through the credit card statement. Try to contribute more than minimum payment on the date indicated on the last statement. Credit cards can be used as collateral for airline tickets, car rental aboard, and hotel room reservations if you are traveling aboard. Make the foreign travel notifications so that the bank can monitor the credit card transactions. In case of traveling aboard, the cards are widely accepted in thousands of stores and businesses around the world, which is why it's convenient to carry one in case cash is insufficient. I did want to say something before I move on to this one. So some people don't know it's 2 different dates that are important when you have credit cards. One is the statement date and one is the due date. You want to make sure that you are at least making some kind of payment by that due date, because by the statement date, it will report whatever your usage is. So make sure you pay, if you can, do 2 payments. Payment on the due date and payment by the statement date, so that it will report a lower usage on your credit card. Like I said, it's important to try to keep that under 10%. So pay off credit card debts. Although it is said you should keep your utilization below 30%, the ultimate goal is to keep it below 10%. This will help you increase your scores faster, along with being eligible for more credit limit increases. This is important because the more that you keep your credit limit increases, your credit limits, your credit usage down, the more that the banks will be willing to increase your credit limits. You don't want to have $500 credit cards. You don't want to have $1,000 credit cards. The goal is to have higher credit limits. So you want to make sure that you keep those limits, the spending down, so that you can get those increases. And also have cards that are actually give you something back. You want cashback cards. You don't want a card that's not benefiting you, because otherwise there's really no point of having it. Make all payments on time. Payment history makes up about 35% of your credit score, so late payments will have a negative effect on your credit score. On the contrary, paying on time is the best thing you can do to keep raising your credit score to the excellent category. Want to make sure you never miss a payment? Sign up for automatic payments and on your credit cards and loans. So I recommend this to all my clients. I have them do auto pay so that you don't miss payments, because it's so easy to do. You can be busy and just totally forget about the date. So make sure you set up auto pay. Don't close old accounts. Closing an old credit card account because you never use it may seem logical. However, not keeping that account open can work against you. If you're trying to improve your credit score in general, it's best to keep unused credit card accounts open according to experience. This is because the length of credit history makes up 15% of your credit score. Therefore, if you keep old accounts open, your score benefits from a longer average credit history. Another advantage is the credit limit on the unused credit card gives you a larger amount of available credit, which can help keep your credit utilization rate low. So don't go overboard with new credit card applications. I find that many of my clients decide to, once their credit score start going up, just applying wildly for credit, which is a big no-no, especially if you're in the home buying process. You don't want to do that. Even if your credit is already good enough to be approved for many credit cards, don't go crazy applying for as many as you can. When you open several new accounts in a short period of time, creditors and credit reporting agencies may view it as higher risk credit, and it can lower your credit score slightly. Instead of opening new credit card accounts, work on paying down the balances on the credit cards that you already have. As your credit utilization rate decreases, your credit will likely improve as long as your payment history and other important factors on your credit report is in good shape. So, thank you all. My name is Tiffany Coleman.